Hi everyone, Leah the trader here, and I'm going to today show you how to pick the best trades based on the scanner and technical chart. So I went over the scanner this morning, right? So you know by the fair value gap and bull signal and all the details that we discussed this morning. Please watch the video that's posted in announcements and in webinar links if you're in our Discord. If not, then this will be beneficial for you also because it's a very important risk management video. So I will share screen with you. So now you've identified 4 stocks that you might be interested in trading that had big flow. And now you have to decide technically which one you're going to choose. So for me, I'm first of all risk manager, not a trader, right? Remember that you are a risk manager and therefore you have to protect your money. You have to think about how much you can lose, not how much you can make. And you have to keep the risk amount consistent. Keep it at the same size, not the shares that you buy. Some people just buy 10 shares of everything, 100 shares of everything, 1 contract, 2 contracts. No, it's always different price. That's not how you're going to be successful. That's not how you're going to profit. All right. You need to know what's your risk to reward. How much am I risking on this trade? If you don't have a stop loss, you're technically risking the whole amount. So if you buy 100 shares for $250, you're risking $25,000 in order to make what? $500, $1,000? That's a horrible risk to reward. You need to think mathematically. You need to think what you're risking, and therefore you need stop. All right. So what I suggest everyone, you have to risk max 1 or 2% of your portfolio. I suggest for starting traders until you're really professional, 1% is the max. If your portfolio is huge, you feel like 1% is too much, do 0.5. Let's stick with the 1. That's what I do personally. All right. When your portfolio is growing, you're going to be adjusting this R unit that we call R is the risk as you go. So how many shares do you buy? This is very important, right? Because again, you need to have certain amount of shares to satisfy this risk unit. And with each trade, it's going to be different. So look at ASTS. All right. So ASTS rallied a lot on Friday, 14.7%. I'm not going to chase. What I'm going to do, I'm going to wait for a retest. I want this to retest at least towards the 50 moving average, which is the red line on my chart. And yeah, you might not trust technical analysis, but quite frankly, that's how they program the algorithms. That's literally as it is, and everyone trades off of this. Even when it's options, when you're looking on an option chain, you're also looking at a technical chart, right? So it's a very important piece of the puzzle. You can wait for a retest. So how you see where it could retest, you can use Fibonacci, or you just look at the 50 moving average. So that's my to go. There's huge volume, which is super important, which is a good sign. I still think there will be some profit taking, which already been. So ideally we go here. So that's my entry, green line. And now where do I want to have my stop? So ATR of this stock is 2.26 on a day. So I'm not going to do the whole ATR, but this is 100 and 200 moving average. If this thing dips below the 100, 200, like literally close to this gap, I'm going to be out. Right? Because with gaps work as a resistance or a support. So if this stock breaks to the gap, it's most likely going to fill the gap and go down here. That's too big of a risk. That would be a different setup. So that is my stop. Okay. I think this is already a generous stop. So now what you do, you take your drawing tool, which you can also count, but you can use a tool right here, which is easy. Do long position. And now, first of all, you do your risk. And now you want to make sure that you make more than you lose, right? So this is your risk. And now where is your target? So you can use this tool and you see, and the ratio is changing right here. And say you want to make at least 1.5 R. So that would bring your risk to approximately $27. But you also have to look at the chart. What stands in my way? What is there? What moving average is in my way? They're all below. You should have a clear runway. Not sure why I have 24 here. I like the 20. All right, so you don't have any moving averages in the way, but you're going to have this resistance. So you could potentially even wait until 2762, right? But this is 1.5 hour, and here would be 1.9 hour, and so on and so far. Okay, it's simple. So you want to ideally have setups that have nice risk and have more to gain. All right, you don't want to be taking a trade where your risk is this size and right, and then your reward is going to be 1 to 1. Okay, that's not a good trade. You know why? Because of this. This is very simple. If you do one risk and one reward, you have to be right more than 50% of time, which is really hard in trading. If you risk two and make one, right? If you're risking $1,000 and making 500, it's a shitty trade because you have to be right a lot. And again, in trading, it's not that easy. But if you risk one unit and make two, you only need to be right 33% and more to make money as a trader. Then that's the beauty of it, okay? So this is very important. If you're going to have consistent risks, so 1,000 lost, 1,000 risk, 1,000, like you're going to make money. If you're going to be inconsistent, right? Like here, you're going to lose money. And some people just buy 100 shares of each and then they have absolutely no risk management, no consistency. And that is the number one thing you have to do. All right, so remember this. So how many shares you buy, simple math. Let's look at the chart again. I repeat this like a parrot all the time. Let's move this where we had it. So how much are you risking here? On this particular trade, you're entering at 25.50, let's say. Let's round it up for this example so it's not too annoying. And then you're leaving with loss at 24.30. So you're risking $1.20 on this trade. So let's say you have $100,000 to trade with, you're risking $1,000, okay? So it's 1,000 divided by 1.2, you're buying 833 shares, okay? So your risk unit is 1,000 because your portfolio is 100,000, for example, and you divide it by 1.2 because that's what you're risking, and that's 833. So if you get stopped out, you're gonna lose $1,000. But if you have 833 shares and you get to your target, let's say only 1.5 hour, right? Which would be 27. Here is 1.5 hour. That's 27. And then higher would be 27.60. You can count how much you're making, right? So if you have 25.50 entry and you have 27, you're making $1.50 times 833. You're making $1,249.50. So you're making more than you're losing, right? If you stick with that trade even longer, you're going to be making even more money. So this is very important. So this trade makes sense if we retest. If we don't retest, I'm going to chase here. Look what's going to happen. I'm going to chase here. Where is my entry? And then where do I put my stop? Below the red. But then guess what? You have the resistance here. So this is shitty trade because you're only making 0.92 hour on what you're risking. You have to give the risk. You could potentially put the risk to the 50 moving average, but you probably will get stopped out if it tanks. So this is not ideal because this is not good risk reward. So you want to wait for retest. That's why I tell people don't chase because the risk reward there is awful. RGTY, this is my setup. It's on the 100. If it retests, it's going to retest a little bit lower. We could potentially get there. That would be my entry, and my stop would be a little bit below half of the candle. If it goes below, then it's going to give all the move back, most likely. Moves about 89 cents on a day, this one, okay? So I'm entering at 1040, and I'm leaving some room here. And then my target would be realistically, around this first resistance of 1.8 hour. That's huge. If you feel like you want to give it a little bit bigger stop, okay, but still you're fine. 1.3 hour, and then the second trail stop could be 2.45 hour. So that's another one that I like, this setup. IONOQ, no, I'm not gonna trade this. Why? Sure, I can take it. But look, you're in the channel. So the probability of this just touching the 100 and then going back down is bigger than it breaking through. So I'm going to wait. I will be patient. All right. And if you look at the scanner, we also had some call hedging. So most likely they expect that this is going to retest. This is a good day to sell calls and hedge. And you sell the calls about the 100 because it's most likely going to retest. And then once we retest, that would be my setup right here. Okay. So again, you look at the risk to reward. Adjust. We go in around the 100. This is my risk to reward. My first target is right. What's this happening here? Do I have a short setup? Here, you see this resistance, so that's what I aim for. And again, like it's all about long position. What's happening here? Right? It's all about where the trade can take you. You don't want to be taking trades that have no runway, right? Why would you do that? All right, so look, 1.96, okay? 2.5 almost here. It might be even too much. So you can have a rule that at 1.5 you take partial. Also depends on the market, guys. If you're in a chop market, you want to take your profits faster. If you have really strong bull market, you're going to be staying in the trades longer. So here is like an idea. For conservative trader, you can give yourself a rule that you take 50% at 1.5 hour, you trail stop to break even, 25% at 2 hour, trail stop to the previous, and the last on 25% if you get there. If not, you're most likely going to get in this chop, you're most likely going to get trailed out. Okay, or you take 1.5 hour 50% and then at 2 hour 50% you're done. If you're more aggressive, you do a little bit less, and you are more aggressive, you wait for longer. But again, depends on the market, depends on how much risk you want to take on. Okay, I hope this was helpful. This is how you structure trades. Again, it's number one important is risk, to understand what it actually means, to understand the stats, to understand this is what will make you successful. So don't get into shitty trades that have no runway where you're risking more than you're going to be most likely able to make. Okay? So that's it for today. Have a good night and I will see you soon. Bye.